This is the DPO indicator. We're watching DPO right now on the Russell 2000 Futures Index. I wanted to show you, DPO here in a typical setup configured with confirmation from a PSAR. So this is a gapless PSAR, part of the gap indicator tool that we use a breakpoint. And basically, we got DPO giving us an early warning for sell signal over here, then gives us an early warning in what I call a wave 4 fake out. So I would look at this as 1, 2, 3, and then this is 4. And DPO will very often give you what's called a flat, or what I call a flat for wave 4. And then the next signal would be a powerful signal for a buy signal here. It's kind of a rule of alternation. You can see the same thing here. We get a nice long, we get a flat sell, and we get a next flat buy signal. And so the next sell signal, which comes in right at the top bar here, gives us a huge down move and a very nice trade. So that's a typical pattern with this tool. And price volume is also something else that you've probably seen a lot on the breakpoint charts. Another powerful tool, but not the subject of this particular example. This here is DPO. So these are the inputs for DPO. We have the ability to calculate it gapless. We have the ability to invert prices. We have the ability to publish multiple time frames and to publish the two other indicators for subsequent processing. So that's a pretty powerful tool. And then these are the inputs. So essentially, DPO works through a process of comparing, going through some iteration to generate a trending signal and to generate a directional signal. The trending signal, I'm going to now actually show the indicator here, so that's on the screen now. And I'm going to also enable the divergence because I want you to see DPO divergence. But basically now we have DPO on there. And to make this a little cleaner, I'm actually going to disable that. But you see the yellow lines indicate divergence occurring in DPO and price. What's occurring, what we're seeing here is also that this solid line here in the middle indicates whether we're downtrending or uptrending. At this point it says we're downtrending, and at this point it says we're now uptrending. Here's a great example of DPO, basically getting us into a downtrend, telling us we're in a downtrend, and then giving us a great signal for the end of that trend. And this is one of the things that DPO has the capability to do that a lot of other indicators do not, which is to keep you in a trade for a long period of time and then pull you out 1 to 2 bars from the bottom. So if you look at this trade, we're in just a few bars from the top, and then we're out just 1 or 2 bars from the bottom. So what I'm going to do here is let you guys watch the euro in real time, or trading actively with the DPO indicator, and you can call out your own trades. There's the PSAR, which is part of the gap indicator, but it's also got the PSAR advanced functionality, which shows you on the upper right hand corner the current risk, which is the R, the current entry price for the current position, the stop, and the previous bar stop. This is a trading assist tool, and it works with the number of contracts you're trading, so it actually tells you how many dollars you're risking for those numbers of contracts if you take the recommended stop. That's helpful in deciding on how to make a trading decision. The other thing, we should talk a little bit about the euro itself, because this is a great contract to trade. If you do trade futures, it's very liquid. It's a very highly paid trade as well. It's $1,250 per point, and some brokerages will have margin requirements of $750 to $100 per contract. So that means 1 point can give you a double return but I wouldn't recommend trading it that way. You probably want to have like something like $10,000 to $15,000 in equity for every contract that you do trade. But regardless of that, it's a great contract to trade, and it trades exactly, related to the Euro USD Forex. The difference is that you get charged 60%, I believe, long-term capital gains and 40% short-term on any gains you make. This is a big difference from trading the Forex or trading, other asset classes in which you get charged a full short-term tax if you, but there's no consideration for some adjustment for time. For some reason, futures have 60% taxed at 60% of gains taxed at the long-term capital gains rate, and 40% of gains taxed at the short-term capital gains rate. So definitely something to be aware of, and for that reason, it makes it actually more efficient to trade than the Forex, and you don't have to deal with all the pips and spreads and other stuff that goes on behind the scenes with Forex. Very liquid, nice contract to trade, and I just wanted you guys to see some trading in action here with the DPO. So there you go. That's the DPO, and I think you can see that following this indicator gives you some pretty good entries, and it's a pretty productive trading tool. Okay.